Hi, this is Sankar Sharma. In this video, we're going to compare between McD stock and Shake stack and see which one is better, which one's got better numbers, better chart, and also we're going to open the bonnet and see under the bonnet how each one is looking, and we want to see where the revenues are coming from country-wise as well as the type of earnings they are making. So without further delay, let's jump in and start checking each one. So I'm going to start with the MACD first of all. If you see the MACD's revenue, you can see by the source straight away. Franchise restaurants are making more money than company operated restaurants, which is very interesting, right? And other revenues are significant, but compared to franchise restaurants, they're not that much. If you look at country wise, you can see MACD has got lot of revenues coming from international operated markets as well as United States. You can see its international operations has been higher than US markets, but also it's getting money from licensed markets as well as corporate. So that is quite interesting to know. Now let's jump in and look at the same numbers for Shake Shack. If you see Shake Shack, most of its revenue is coming from directly from Shack outlets, and the royalty based revenues are there, but they're not that significant. Licensing revenues not notified. But if you look at country wise, majority of its money is coming purely from America. You can see right away if there's a lot of global turmoil, McDonald's will be affected, Shake Shack won't be. Right there, we have significant difference the way they operate, and considering all the geopolitical issues we have, Shack is better placed. Now let's go and check other metrics. And the next one I want to look at is the earnings. So if you look at the earnings for McD, you can see the earnings for quarter three has been up. And if you look at the revenues is also up and positive. So that is good sign for McD. Let's look at Shake Shack earnings. If you look at Shake Shack earnings, you can see the earnings surprise is positive and revenue surprises are positive. In other words, EPS surprise is positive, earnings per share surprise is positive, revenue surprises are positive. And you can see if you look at last 4 quarters, majority of them are positive. Majority of the EPSs are positive for Shake Shack. For MACD, there's like, if you look at last quarter, it's 50-50. It's same here. And if you look at the revenue on EPS is up twice, down twice. Revenue up and down twice, up twice. So overall, what these figures say that Shake Shack has got more stable profit and revenue generation right now. Let's go and check other details. If you look at MACD, MACD's gross profit is slightly negative compared to previous quarter. If you look at net income as negative, EBITDA is negative as well. If you look at Shake Shack, if you go and look at the numbers, you can see the gross profit has been consistently positive, net income has been positive, and if you look at the EBITDA is stable. So based on that, EBITDA and income, Shack is doing better compared to MACD. Now, one thing to remember is MACD pays dividend, whereas Shack does not pay dividend at this moment in time, according to what we are seeing here. So if you look at dividend, there's no dividend for Shack. If you go up and check dividend, there is a dividend paid. That is 2.25% for MACD. Now, let's go back to statements and look at cash flow, okay? If you look at MACD cash flow, you can see last 2 quarters has been negative. Let's look at Shake Shack revenue, Shake Shack cash flows. You can see Shake Shack has got 2 quarters of positive cash flow. Cash flow wise, Shack looks better than MACD. And also recently MACD has been plagued by the E. coli issue. And if you recall, Chipotle had this issue and it dragged down its revenue and profits for nearly a year, whereas few other companies, they've actually recovered very quickly. So it depends how well they manage the situation, especially for MACD. Whereas Shack don't have that problem, and Shack's free cash flow is much better compared to McD's free cash flow. Now let's look at the balance sheet. And if you look at the assets and liabilities, and if you look at net debt, and total debt is there, but the assets and liabilities, if you take into account, the equity is negative, but not too bad. Let's look at Shake Shack and look at the balance sheet. If you look at Shake Shack, it has equity, which we don't have here. The total equity in this case is, sorry, it's not that we don't have. The total equity in case of McD is slightly negative because liabilities are more than assets, as in case of Shake Shack is positive. So the total equity is positive in Shake Shack and negative in McD. And net debt is really small. Net debt is running into billions. So between the two companies, looking at the balance sheet, Shake Shack scores better. So cash flow, Shake Shack is better. Balance sheet, Shake Shack is better. EPS and revenue-wise, Shake Shack is better. Because Shake Shack is US-based and its outside earnings are not that big a component for its earnings, and because it's not part of any global outlets, Shake Shack is, in the current situation, looks much better as opposed to McD, which is around the globe, and current global situation might affect this in addition to the E. coli. So just by looking at the balance sheet and the cash flow, Shake Shack is much better scoring at the moment. Scoring really high, I would say. Now let's go and examine the charts of both companies. If you look at McD, weekly chart, it has got a pattern called rising wedge. Rising wedge means it is not a good sign, means stock price is expected to go down. So where we should expect around 284, it might find support for MACD. If you look at MACD, you can see it has a huge gap. And since the E. coli announcement, it had a gap in price. Now it is looking bearish. Most likely it may find support around 284. If it doesn't hold there, it's going to go down, but most likely it might stop and turn around in the short term. If you look at Shake Shack, on the other hand, this is a weekly chart of Shake Shack, and it looks like it wants to go up to 145 from its current levels once it breaks above 115. So maybe the earnings will help it to break through that barrier, but if it does, if Shake Shack goes through that barrier, it could see 145 as its future target in the near term. So again, chart-wise, you can see MACD is looking bearish, means the price could go down, and Shake Shack is looking bullish, meaning price could go up. Subscribe to this channel. Thank you so much for a privilege of your time. I'll see you in the next video. Bye for now.